Alright, you guys, this video is about, this is going to be a simple video. A lot of people struggle, which is basically about risk management. Usually a lot of people do have good chartings, but you do not know how to execute or you get too scared to actually hold on into a trade, right? And I know that's mostly the most common thing that has to do with traders, that you don't know how long to hold, or you're just like, oh, like what's going on, you know, like, am I wrong? Why didn't I hold so much? And it's because you actually are playing too heavy on a trade, and you're not using what I call portfolio diversification, which is you just divide your port. Let's say you have $1,000 account, which is basically a good account size. You have a 1K account. A lot of people want to make $300 a day, $1,000 a day, or see everybody's Instagram portfolio or profits or stories, whatever you want to call it. You see that you're making probably like, they're making 1,000 a day and everything, right? So everybody starts going over the head of themselves, and they want to do that every day, just like them, right? Just like me, or just like everyone else you see. But at the end of the day, it's like they probably have a bigger port than you do. So you want to be able to hold, like, play with your emotions, and the way you get rid of the emotions is by playing less. You want to play less contracts, less sizing, and use your portfolio diversification, which is just dividing trades for every 1,000. So let's say for me, if I'm trading with a 1K account, I would want to, let's say, right, I'm gonna start off here. It's gonna look a little weird. So let's say I start off with a 1K account, right? This is your total account size. Total account size, total account, right? So you have a 1K account. So in this trade, when you're trying to play with like SPY, if you play with Tesla, I'm like bigger contracts, like bigger sizing, what's it called, like options. I can't even talk right now. So bigger pricing on options, which is meaning like $200, $400 in the money, not out of the money. You don't want to play really far out, especially like a lot of people want to play Tesla and they're like 10 contracts away, you know, because they're cheaper, and because you're seeing that people make money on Tesla. But the thing is that you're supposed to try to get the at least close as you can to in the money, which is like 3 options prices close to the strike where we're at right now, and that would be a way better move. More money, less of a data coming in, and you'll make a good amount of profits. So let's say we have a 1,000 total account, right? And you want to play like those. That's why I like playing AMD, SPY, Amazon right now. Not how it used to be before. Maybe some Tesla, but I would like to play Tesla when I'm in profits, which meaning after like 2 weeks of profiting, or 3 weeks, you know, that are really good profits. Apple is a good one. The little small ones, let's say, what are the ones? QQQ, Facebook. Sometimes Facebook has good ones depending if the IV is not too high. But let's say we have a $1,000 account, right? You want to start out with 1K. So with 1K, if you divide it into 10 trades, that means you have to use $100 per trade. So meaning try to look for a contract that either costs $50 or $100, 110 maybe the max per price, which is meaning like 100 is 1.00, right? That's the contract pricing. So basically the contract is equal to $100 equals one contract of 100. So that means that if you use a 1K account, you'll be down 900, right, for one trade. So let's say you're using, let's put an example here on SPY today, right? Let's put SPY. Let me get back to that where we were. Let's put SPY today, right? SPY today, you can see that if we have our levels, any level, doesn't matter how you guys want to do it. Just know that you guys can see a rejection here from the day before, clear rejection. You see that there was a gap fill around this section, right? You start seeing your levels, 15 minutes, that's right, like using them. So you have your levels, right? Let's say you have all these levels, maybe another one here. It doesn't matter. I'm gonna just show you guys how to use your levels with your port. This is what I really love using, and this is how I get really less risk management. So even if you have all these levels here, and you're using the 5 minute, which is a good, 5 minutes is a really good place. But even if you use the 1, let's say, I'm gonna just leave it at the 5, right? So let's say we're at the 5 minute. We're starting off today with a 1K account, right? We're starting off with the 1K, and we buy one contract of 100. Bought one. Or let's say we bought one contract of 100. Our loss is, let's say, 15% to 20, depending how good it looks, right? So far, even if you put a 15% loss, that means you'll lose $15 only for one contract. So right now, you got to look and compare on the market. Okay, it rejected here so many times, but the market, they go bullish, and maybe you want to think, okay, we might actually move up and break that 390.40. This is why you want to wait for the break and not assume that it's going to move up, because here you don't see any candle that actually is moving up and breaking down, right? So now let's say on the 5 minute, let's say you buy calls, right? You buy calls and you enter here around this candle. Let's go back around this section, right? This is the first 15 minutes of the market on the 5 minute time frame. And then you're seeing, okay, you know what? You have your levels below 389. We go there, 388, 381, 11, right? You have your levels and you're seeing where can we go. So let's say you're having calls because you see it gapping up and you could see a continuation. So I'm gonna give you the right way and the wrong way. So let's say you have your calls, your stop loss has to be below this level. So whatever whatever level you entered, that's where your exit's gonna be. So for example here, if you entered in between this range 390 and 389, maybe you entered at this candle, right? So you will have something like this below this 389. So if you entered here, guess what? Your stop loss is like this. You want to exit once it hits below that level. So you have a 50-50. So you will get stopped out really fast. You will get out and lose $15, right? So let's say you do that because you're crazy and we just don't care. Then there you go. You lose $15 off of one contract. So now your total would just be contract 100, bought one, or lost 15 or 20. You lost $15 because let's say that would be your stop loss, or 20. So let's say we lost 20 bucks. Lost $20. Now our current total now is at, our account total is gonna be now at fucking it's gonna be at $980. See that? You will have $980 left of your account because you lost one. So then guess now what? This deletes because you bought calls and your calls got, your calls got fucked over. So now guess what? Now you have $980. Your total account is gonna be now $980. Option power, you will have left. Option power level will be 900, right? Because you only used $100. So you still have another chance to do the same position. So even if this went wrong and you're like, okay, fine, you got out, you went wrong, and you have this left. And now you do the same thing because, oh, it might bounce. You got a green candle, or maybe here it might bounce. You do the same thing. Let's enter one more time, right? Let's enter one more time. Entry, one more. Enter one more. Obviously you lost, right? Because let's see if we lost or we didn't. We already saw it. So let's go see. Let's play. And you get stopped out. Automatically you will get stopped out, right? So you got stopped out. So now what? Now you lost $40 because we had a 15 to 20% loss. Let's say 20 because the one I did 20% loss. One more 20% loss. We bought them at 1, stopped out at 8, at 0.80, right? 0.80. That was our stop loss. So guess what? Now we have $960 in total. Option power left 800, right? See what I mean? So you're using your portfolio. So now you still have 960 bucks left. You lost $40 on the day with good stop loss. You only have $800 left. We lost 40 already, but we still have more than 8 chances of trading, right? So now let's see what happens. Let's wait. Maybe we want to find a reversal candle, reject 388.63, or maybe come back up to 389 or 388.11. You know, we still want to see that we saw 388.11 when this candle closure. We saw buyers, which buyers came in here before, so it might reverse. But let's see. This is where sellers were at, right? You could see that this is where buyers were, so now they could be sellers. So to know that, we might want a rejection here with like a candle, shooting star, or inverted hammer, or something like that, right? So let's see. We wait patiently. We lost 2 times. Fine. It's barely been 30 minutes in the market. So now we check. Let's see. What do we get? Okay. We got that candle. We're still seeing buyers are trying to step up. right? Buyers are trying to step up. Let's wait. And there you go. That's a nice reversal candle. It's rejecting this side at 388.12. Right there, these are all sellers. So what you could do now is that you could enter on the either this candle or the next candle, but your profit is going to be above this level of 388. It's going to be a little more higher, right? So let's check again. See, that's a nice entry. So this would have been your profit, your entry on your short position, because you saw that it was dropping and it rejected this 388, and your profits will be all the way on top. And you're seeing this, right? You're seeing all of that. So how do I know sellers came in? Because you need to know what your wicks stand for and how the trend is going. And by seeing how it came down and rejected this and not came up, if it would have been a powerful bounce. You would have seen that it would have taken over this level, but it didn't. It just kept rejecting. You saw that buyers were ones there and they pushed it up, and now here they pushed it down. You could see that also in the smaller time frames, even the 1 minute. You could see how it rejected. You see that? It rejected that candle at 388.63 and it stayed below, and there you go. So this would have been your loss, and you do the same thing. Another entry, right? So now we enter again with one more candle. Let's see, one more candle, and your stop loss is going to be the same thing, 20%, 20 to 30%. It would never hit. So now we enter one more time. Option power left 800. We're down 80 bucks. We're down $40. Option power left $800. So we enter again. One more entry at 1.00. Let's just say 1.00, right? Our stop loss is gonna be 20 to 20% this time. 20% stop loss, which will be around, let's see, this is 13%. You see, so this is 13. 20% will be probably all over here, right there. It says right here, 0.20. So that will be our stop all the way on top here. It never hit our stop loss. You see that? It never hit our stop because it never went above this level. So guess what? You still have it to hold all the way to 385. You did not miss anything. So our stop loss will be 20%. You buy one, and guess what? Look how much percentage we make from here. 63%. So now what? We lost 40%, but we make 63 off of one. This one went 63 is at 1.63. 1.60. So now what do I do here? What I do here is that either if I have one, since we have one contract, we either take profits or we wait until it goes to 385. And the way you stay green is by having this risk reward. You put it to almost half of the candle, especially if it's a big one like this. You get to half of the candle, so our stop loss will be there. And we fix this to this. This is 39%. This is half of it. So now our contract, since we bought more at 1.00, right? Never hit our stop. If we exit right there, we're up 60%. X 63% exit here. We are at 63%. Which means we're already up $20 on the day. So if your account was at, we were at 940. Now we are at 1,020. Just for one contract. You see that? 1,020. And if you want to hold it longer, then guess what? You hold it. This will be our exit. And we will be at break even for the day. Alright, so now let's see what happens. Can we go over here? Fuck it, let's hold it. There you go. Boom. From there to there. How much percentage is that? Let's see. From there to there. Or was it entry? 74%. 70%. It's at 1.70. Your account will be at 10.31. Exit right on the dot. You'll be green. Why would I exit here? Because we're already at 385.65. See that? But look, our stop loss was what, halfway of that candle, right? It never hit. It never hit that stop. Right halfway. You could check the 1 minute, it never hit our stop. See that? Never hit. just came back down. Obviously, if you're playing by twos, now I'm gonna show you the difference. So now we're green on the account, and you still have option power left. Guess how much you have? 700. Oh no, 600 option power left. Now we made it to 10.31 because we got the 63%, and now we're power left. We have 600 option power. Our account is now at 10.20, 10.31. So we're green on the day. So now we just wait for a reversal. Maybe you want to see a reversal on the EMA. Let's turn on the indicator. EMA. This is the 9, right? Let's put the 9 there. And let's see, maybe you want a reversal now, right? So now you put your EMA, 21, 9, whatever you guys use. And just wait patiently because buyers might step up here, right? Look at all these buyers stepping up. So now you wait patiently to see maybe we get a reversal. Let's see where that candle closes. Nice. Another little setup. You see, look. So now we could re-enter again. It's rejecting 385.81. So we could re-enter one more time. We wanted a reversal. I wanted one, but we didn't get it. We just saw a rejection with a shooting star. Shooting star usually means that there's another one's going to be red. So guess what? We re-enter one more time. Our stop loss. Where do you see, if you don't have one, where do you see, where do you stop? Above this candle. Right, let me put my short. Oh shit, short. Above this candle. And you see the wick here? This could be your stop. Above the wick. That's 9%. Maybe keep it at 10 so you won't lose your profits of the day. So it'll be around there. Basically above the wick. And now we're assuming we might hit all the way to another 60% move. So remember, we were at 10.31. 1031 total account now. Total account. We have option power left of 700. So now we get in one more. Getting one more time at 1.00. We choose a different contract that costs the same. One more time at 1.00. Our stop is now 10%, right? Because we want it above the candle or else it might go over. Stop loss 10%. Oh shit, stop loss 10%. So we won't lose our profits of the day. Or maybe you could put it at 15. Just know that if you lose 15% of this, that's that. You're going to lose $15. So your account will be at 10.15, which is still green, right? So we put it at 10.31. Stop loss at 15%. Now you got to be a little more control because what if it doesn't dump? We get in one more and there you go. Re-entry. Entry again. Entry one more time. And let's see. Play. Boom. It fucking... This is where it kind of sucks. Where you have to be able to get ready to know how to sell. Obviously this kind of closed. But when it's charting, when you're playing on time, you'll see this moving. Like you'll see buyers trying to come in. And this is where you kind of want to take profits. When you start seeing that push, right? So even if it hits your stop, there you go. Now your account's at 10.15. Fine, it hit our stop. 10.15 if you didn't take profits. You're still green on the day. And you still have 600 option power left. See that? There you go. 600 option power left. And now we just wait for a rejection. If you could have entered here, if you wanted to, that rejection on that EMA, then you would have caught it for another percentage. But so far, I don't like this little move, so I would just wait. But if you did catch it, that's let's see, that's a 32% move. That means you make $32. So you'll be up at 10.45. That's if you catch that move, right? But so far, let's see, below this level, we get in again. Boom. Let's take it. Stop loss there. Now you see buyers are trying to hold it, so we could change our position again. And we'll be up 34%. Re-entry below that candle. We'll be up 21%, so we'll be back to getting our money back. Plus 21, 10.35 or 34 around there. If it hits our stop. And there you go. And we're straight to the bottom. It didn't hit our stop. I said if it hits it, there you go. Straight to the bottom from this entry to there, our stop loss on top. That's another 58%. One contract. That's 10 point. We're at 10.15, right? Plus 58. That's 10.58, 60, 67, 8, 9, 10, 11, 12, 72. 1,072 in your account with 500 option power left. See that? So now you only make $72 in the day. Obviously, if you start playing with 2 contracts, you would have lost in the beginning. Instead of losing 40, you would have lost 80. Remember? You would have lost 80 right here when we started at 1,000. But you would have been up double. So if you would have been up at 72 when doing 2, you would have had probably like 100 option power left, and this would have been at 1,100 and like 172, double. You would have made 1,172 option power on the total account with power left. That's if you play with 2 contracts. But when you do play with 2 contracts, you gotta keep playing with 2 because you want to keep that percentage the same. That's basically the whole level charting thing is that. So that's what I try to do. That's why I'm able to hold. So for me, it's like I'm a risk. I like really being aggressive when I come to trading with a bigger account, because then like that I could play 10 contracts, 10 contracts, 10 contracts, and when I see something like this, I would probably put my stop all the way above here and then re-enter heavier. So today for the exit that I had, you can see, look, let's go back to the future where we're at now, and look how those levels hold. So even if you re-enter here again, you see that shooting star, you still get another time to re-enter. Above the EMA, you get your stop loss above the EMA, right? You still have 500 option power left. You can still play with it. Power right there below this level. As soon as it goes below the level, it's gonna stop you out. And look at that. You have a 20% stop loss to the bottom, and then you win 39% once it hits your target. 35 and you get out, and there you go. Another. Let's say you get in again, right? You have it at 10.72 after that one trade. Now you get calls. If you want to get calls, you waste another 100. 1.00. Stop loss at 20. It never hits. 0.80, right? Stop loss at 20%, which is 0.80. This never hits. It goes up. You make 39%. That's $39. We make $39. $39 here. You add it there plus 39. That's $102, $111. So it's gonna be like at 1111 or 110. See? And you still have 500 option power left. See, so you have, that's what you guys gotta practice, and that's how you're able to hold. Then obviously here you see that the sellers came in, they came back down. So now what you want is to hit below the EMA. And let's say you do get in below it and your target is above it, then you'll lose back whatever you made here. And then that's literally all I've been doing every time I trade. So then now we're at, I'm gonna tell you why I held. I got in because it held this position out 385.65. We had gotten in here for the puts. I went back up, we were money. But the thing is, I wanted it to hold 386.05 because this was where once buyers were. You see that? Buyers were here pushing it up every time. Buyers here, buyers here. So now guess what? These are all sellers. So all I did was waited for an inverted candle or reversal candle, which I did. And we averaged down to our position. So guess what? Where would I exit tomorrow? If it goes above it, then I'm out. So far I got this all the way to go to 383. If not, we still have another area, which let me check out. The 4 hour, which we have a double top forming. We could go all the way here to 377.79. See that? Obviously we can start putting our micro levels, which is another one here, key level. And that's it. So if this comes back up here tomorrow, I will not exit. If I see another reversal, then I'm gonna add another more to my position, because we average down. So now we're probably like around here, red there, and that's it. We're only down, we can only lose 23%. So I could average down if we see another reversal candle around that 385.60, showing sellers are coming in. So guess what? Either I take profits here, or if I see aggression coming in, I can still go all the way to 381, which is 114% if it hits there, and I'll still hold all my contracts. I would just switch this like this. See that? And you will still keep it green. You just switch the stop loss. See, it went from here, so now you have all this green. So basically it'll be like this. All this is green. So even though you get stopped out, you only get like 75% profits. But if I want to hold all of them and keep it all the way to hits 380 because we're going to be bearish because of Powell tomorrow, then guess what? We go straight down to 380.86. And that's 100 and how much percent was it? 124% move. And obviously if I have 134% move with 3K in there or 2K, that's $3,000 with one trade. But I'm risking only 20%, so that would be I'm risking $500 to make 3,000. You see that? But if I have a 10K account, that's the thing. If I have a 10K account, which is $10,000, 10K, $10,000, and I'm dropping 3K per trade, I could do how many trades? 3K, total of 3 trades in a day. If I lose 20% here, that's $600 loss. So let's say I lose 2 red ones, right? And now I'll be like at 9,400 right here. If I lose, right? So if I lose one, let's say I get red there. Oops, I don't know what is that. Let's say this one's red, right? Minus 600. And then I get in again, 20%, minus 600. So I will be at 8,900. That will be my new target, 8,800, my bad. 8,800 if I lose 2 red ones, which I'll be down 1,200 on the day, right? But since I have this one, let's say this one goes that 100% that I said, right? That 100 or even 80%, 80% here or 100, let's say 100%, guess what? That's $3,000 back. So this in total equals minus 200, right? Minus 200, and you add the 300. So that means I will only make, in reality, equals 1,000. Let's see, subtract that to that. That's it. That means I'm only making $2,400 in a day. In the whole day, because I recovered this, I'll be at 10, at 12. Let me see, 2,400, 2,000. I'll be at 12,400 like that in 3 trades. This overpowered these losses. Obviously, if I get all of these right, or I get 20% right, then I will make $600, right? And then you add more, 13K. So you have, that's why I use my portfolio. But if I want to use it by 2K at 10,000, guess what? 2K per trade, 2K, 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 5, 2, 4, 6, 8, 10. I get 5 trades in a day. 10% here, loss, 10% loss. Let's say I make 30% here. This is minus 30. And then I make another trade, let's say 20%, because I'm usually getting 3 green trades. Or maybe this one goes 40%. And then maybe this one I lose another 10% or 15, maybe another 10, because I usually like doing 10%, and then I make like 15% here. So 2K, 10%, that's $200. So I will lose $200 here. See how it adds up to my account sizing? I will make $300 here. I will make $400 here. I will lose $100 here. And I will make $150 there. And you add it all up. I know it's a long session, but just trying to show you. So it's 10,000 minus 200 equals 9,800. The first trade, and it looks like, okay, you're red, plus the 300, that's 10.1, plus the 400, 10.5. See, minus 100 plus the 50, right? 150. That's $550 in a day if it goes that way. But obviously, if I start making, if we switch it up, if we make 100% here or 120, like how we're assuming there, or when I make those 100% trades, that's 1K. So that's $1,000 trade, or maybe 200%, right? Or maybe I get all of them green. Maybe that day was a good day, and the only one I get red is that one, and I get 100, maybe 20, 30%, another 40%, 50% here. You see, like what I mean? Like some days are good, some days are bad. $500, and then it just adds up, and I only lose one red one. You see? So you add that up, obviously, and then look what happens. 10,000. Oh shit, $10,000. You add 500. Add 300. Add 1,000. See, minus 100 plus 150, or maybe you lose another $200 or $300 minus 300. Look, you're still up 1,000. I made $1,550 in a day, and I do that consistently every day. This in 1 week is gonna be up to the same thing. Let's say the same price. That's 1,500. Let's do that another time. 1,550. Let's say repeat it. See, that's 2 days. See, 3 days, 4 days. So you keep adding more and more. So I'll be up like most of 17, 16K in that week. In a month, obviously, you add it up to a month, it's gonna be a shitload of money. See, so that's basically what I do. Level to level, wait for rejection, be smart about it. This is portfolio diversification. How to use entry points and exits. And if you have a $500 account, do the same thing. Get into a trade. That's why when you get into those AMD ones, AMDs moves really slow, and their stop losses are really huge. AMD stop losses, look at this. AMD, right, from this level today all the way to this one after hours. Oh shit, after hours, nice. All right, so these are more levels on AMD. Look, from here to there, you put your stop position. Your stop position will be over here. It's really crazy on AMD. See that? So you'll make a good amount. 200% from here to there. But the contracts are cheap. So 20% loss would be like, oh, $5, $10. See that? But you make a greater move. So that's now we're just ranging on these levels. And they're cheaper. They're affordable. $50, $60. You buy two, you waste 100, and you're able to take profits and trim. So instead of buying one contract of 100, you could buy two contracts of 100 and trim at the same time. Alright, you guys, hopefully this helps. I will make another video on how to do levels. I've done this so many times. There's videos on my YouTube also to do how to do the levels, but I'm just showing you how to use your portfolio. You got to use your portfolio and start off with low contracts and play the chart. Fuck your port. Just play the chart and look how it goes with your play, and you will notice that you will hold longer. Trust me, because then you know, like, okay, that's the whole thing that I do when I get in my head. Every time I trade, I'm like, okay, they cost $400. Yeah, but if they cost $400 and I have a 1K account, and I know that it's doing a reversal candle, like something like here, right, on the AMD, and it looks perfectly off my level, guess what? If I have a $1,000 account and I want to be really crazy and they cost $400, stop loss will be up to like 20% here or above it, right? 20%. I'll lose $40, $60, but if it goes down here to exactly where it touched, there's my thing. I will make the 200% move there, 100% move, 100% move, and you'll be set. You already flipped your account. You made, let's say, if you put 500, you make 500, and there you go. Take your money. Now your account's 1,500. You get me? And then you'll lose because you only have one trade, because you're only playing with one heavy one. And then you'll lose $60. So you lose 60 and you make 500. So that's what you got to think of every time you get into a trade. Okay, if I put 20% loss, how much is that? I'm putting 1,000. If I put 20% loss, I'm losing $200 or $100. You see that? So that's what you got to think of. Every time you get into a trade, think of what you're risking to what you're making. Because if it does go your way and you hold it to your level, you're going to make a good amount of money, and it's going to keep flipping your account every time. One contract, two contracts. That's why I recommend to get in with two contracts. And I highly recommend to get a 1K account. I'm losing my fucking voice already. But yeah, you guys, just keep it as simple as you guys can. Don't go too crazy. Don't overthink. Just keep it simple. As you guys can see here, I have no volume. I just have levels. Levels are telling you everything, and they tell you the secret of the whole chart. The rest of the EMAs are just a moral a confirmation to tell you that it might go the way that you want. Alright, so yeah, it's a long class. It's a long session. I don't know what to call it class. See, I'm already fucking up. My voice is leaving. So like I want to cry and shit. But yeah, that's basically it. That's what I do. And I do that with anything. Patterns, charts. Same thing here. You see that pattern. SPY. I'm going to show you guys what I see on SPY. We did all the drawings. We go to the bigger time frame. Go to the daily. On SPY, basically is doing I see that it's just going to try to drop down tomorrow. It broke out of this trend. We have a level there. Here. And here. So below that we go straight down. See, that's where we rejected and that's where we flushed. So now I just want it to hold. And like I said, 377.70. If it bounces off, this is where buyers were. You can see the buyers move a little bit down. You can see what happens when it comes up and then it rejects here. Rejected there twice. So you can put another level there. You want to see where it's doing the bigger moves. Just by seeing what it does to those levels. Level here. You see something else is going on right there. Buyers might try to come in a little bit to push it up. You see that? Pushed it up, came back down. Pushed it up, came back down. Pushed it up, came back down. It broke and it went to shit. Held that position and then pushed it up, pushed it up, pushed it up. See, so now you know that buyers might come up in here. And all you do is just follow it. Follow what you think it's gonna do, and that's it. With your stop loss, you will never lose a lot of money. Trust me. Learn the stop loss and you will not lose anything, especially on a 1K account. If I see when somebody loses $200, I'm like, dude, that's a lot. $200 on a 1K account, that's too much. Max you should be losing is at least $60 on a 1K account. But if you're losing a lot more, you're gonna burn that account so fast that it's not gonna work. You know, like, stop thinking about the crazy money that you might make. Alright, you guys, gotta go take some medicine and try to do some cardio. Let's see what the fuck happens. Well, yeah, long class, long session. Just know that. See you guys.